Welcome back. You're watching Trade of the Week with me, Zinati Guma, and joining us for a tech analysis of Thungela, Glencore and Absa is founder of Herenya Capital, Petri Redelinghuys. Thank you so much for your time, Petri. Now, we're looking at two commodity stocks and one bank. So let's actually start off with Thungela because and I must imagine that chart is quite interesting because Thungela has been in a downward cycle for a while now. But we do know, obviously, before that stock brought a lot of joy to investors in 2021, 2022, where you had people regretting that they didn't get into the stock when it actually listed at around, what, 25 Rand per share. Yeah. But we know the levels, the astronomical levels that it went to. But then now that's fizzled out. So just show us that chart.
Yeah, look, and firstly, good afternoon, and thank you for having me. I think there's a couple of times that I've even been here trying to, last time I had a little chart still left on this, was a little rounding bottom situation we had sort of back mid last year, and a small little rally off the back of that to 185. Since then, again, it's just kind of melted away into oblivion over the last what is it, almost a year now. So it's been quite a long time, right?
Yeah.
It seems to me that we've put in a bit of a bottom, so we see this little formation here. It looks like we might have run out of a little bit of momentum towards the downside, and we can also see that we've got a nice bullish divergence set up here. So if we look at the fact that we're making lower lows, I'm just going to draw some fancy lines for you guys. If we can see that we're making some lower lows there, and that situation over here is not quite the same, right? So we have a situation where we have, let me connect a bit further back as well. So to me that looks like it's a somewhat bullish setup. Not necessarily for the world's biggest trend-changing situation, but for potentially a bounce back up into this resistance area, so maybe 140 Rand, maybe even 157 Rand as a potential target. Just a little mean reversion trade, I think, is at least the starting point. I think there's a couple of things here as well. From a fundamental perspective, I think that this is a bit overdone now. Yeah. Some of the headlines, or some of the headwinds that the stock has had, of course, being able to sell this the produce, right?
Yes,
they've
exactly.
had issues with Transnet and the ports and all that kind of stuff. I do still think that we are headed for higher energy demand. This is something that I know that I've been saying for a very, very long time. This is still a base case scenario for us, at least from our perspective.
Yeah.
We are coming out of a period where we've had a series of really hot winters in the northern hemisphere, so potentially that could stimulate some demand. What's interesting to me is how the Europeans are sort of moving away from nuclear energy and back towards coal and more traditional older types of energy.
Which is so strange because, I mean, weren't they leading the charge on the green energy transition?
It is interesting to me because we have had, you're exactly right, yeah. They've got all these sort of net zero emissions targets. Yes. But then what they're doing is they're shutting down nuclear power stations, realizing that they're running out of power, and the fastest, easiest way for them to get power back into the grid is to fire up the old coal power stations that they shut down some time ago, and that works out well for the likes of Thungela. So I think that there's still quite a bit of market left for this. Yeah. And I think that this is potentially a good entry point. I'm not 100% sure that it's going to be, the trend changing point, but it very well could be. And at least for a mean reversion trade, we might have a nice little situation here. I think if we can break this downward trend line that it's put in, since it made the highs at what, 375, 380 Rand a share. If we can break that trend line, then potentially we might have a trend change scenario. But for now, I think there's just a nice little mean reversion trade here. We're trading it from essentially 120 Rand to maybe 140, 145 Rand. With a stop loss below sort of 110. Yeah. So it's a decent risk reward, 1 to 2. 1 to 2.2 kind of thing, and a decent entry point, I think.
I think there's so much uncertainty when it comes to investing in coal. As you say, that you think that we might head to a point of high energy demand, but there's some people that are saying no, because we need to accelerate this green energy transition. Then you shouldn't invest in Thungela for maybe just beyond 5 years or something like that. So I don't know, would you say, because there's certain stocks where you're like, okay, you're sure that this is a trading stock, and then you're sure that this one is a long-term investment. So would I be right either way, whether I say that this is for long-term investment or if it's a trading stock?
I wouldn't hold this stock for the next 20 years, right?
Yeah.
But for the next 5, sure. So maybe the medium term, right?
Yeah.
Maybe not the next 20 years or 30 years, right? So this isn't a stock that I would stick under my mattress and forget that I have, and hopefully one day when I'm retired go, ooh, look at this, you know?
Yeah.
I think this is the kind of thing that you would want to potentially ride. You know, I think the market is one where it goes to extremes. If we see the coal price really start to get a move on, the oil price really start to get a move on as well, and I mean, it's interesting to me how we've seen attacks and all sorts of things happening in the Middle East, and the oil price hasn't really responded. So, you know, if we do start seeing a bit of a shortage situation, then the company is so well geared, it can make an enormous amount of money if the price of coal goes up just a little bit, right? So I think we have a situation where over a space of a couple of years, we could see the same type of movement that we saw from listing. I mean, that was what, from 2021 to kind of 2022 in a space of a year? Well,
that's the thing, because the biggest question, and even on Stockwatch, I've been getting this question that, do analysts think that it could have that astronomical growth?
I think it's possible, yes. I do think so, right? I think that, you know, predicting whether or not it's going to take place over the next year is a bit tough. I think, though, that this is a potentially good entry point, and we've seen, I mean, even stuff like Sibanye, right? When Sibanye was down in the 14s, people calling it to 70 Rand were crazy, right? But it happened. You know, it's come all the way back down again, but I think that we could potentially see Thungela back at the highs within the next 2 or 3 years. Depending, of course, on you know, whether the world economy melts down or not. But it's looking increasingly like it won't. So it usually doesn't, actually. But it does look, you know, there is still a lot of economic headwinds. I think the Fed is obviously out later this evening. Later this week. And a lot of the tech companies in the US are also reporting, so that I think will have a big impact on markets and risk sentiment going forward. But generally, you know, what we see, even when markets start to turn around and come under pressure, generally that's a good time to start buying things like copper and the like, because generally these commodities are then at the lows of the cycle, and when the market begins to recover post, you know, bad times, the commodities are generally quite strong. And I think the same holds true for the likes of Thungela and for the likes of other sort of energy and resource players. I mean, locally, Sasol, internationally, you can probably look at something like XOM. I think these are all very, very good buying opportunities at the moment.
Well, let's talk about Glencore, and quite a firm favorite, because whenever you're asking about, you know, good diversified miners, a lot of people tend to go for Glencore. Of course, also still having coal, and then merging that with the tech resources or coal assets that they're going to spin out in about, what, 2.5 years. What are you seeing there with Glencore?
So essentially what we can see here is we see a slightly more resilient share price. I think just for the sake of interest, right, we'll compare this to Anglo's very quickly. And we can see that Anglo's chart over the same period of time is trading sort of near the lows. And if we look at BHP Billiton, we can see here that we have a similar type of situation to Glencore, where BHP is again a more diversified miner to the likes of Anglo, right? As where Glencore again is the more diversified miner compared to the other two, right? So what's interesting is how there's more price stability in this, right? And the likes of Anglo's, for example, Anglo's, Billiton are both buys in my world at this stage as well. So there's another two sort of trades, if you like. With the Glencore chart in particular, we just have this nice little range that has been trading between sort of 97 and 110, 112-ish. We've bounced off the bottom of this range. Again, we've got higher lows on the price chart. So there's a little bit of higher lows situation happening there, with a lower lows situation happening on the stochastic. So we've got a little bit of reverse divergence there, which is generally quite bullish. I think we just see a move back to the top of this range at about 110. Maybe we're not catching the exact bottom of the range as an entry point, but I think we still have a fairly decent enough risk-reward ratio here to take this little, you know, call it short-term trade. A couple of weeks we'll probably be in this.
All right. For a long-term investor, do you think that this stock could unlock a significant amount of value when they do kind of spin off the coal assets?
I think it potentially could, yes. I think it's definitely something worth having in your portfolio. It's something that we have in our portfolio for managed clients. And it's not, I wouldn't say a massively cornerstone position, but to give it a decent allocation, somewhere between 2.5% and 5%, I think it belongs in your portfolio.
All right. Well, let's shift gears and go into banking. Let's take a look at Absa. Is Absa just too undervalued against its peers at the moment, where the price is just too good to pass up?
I'm not really sure that I want to really answer that question because I don't know. I think that from a technical perspective, it looks fairly decent. I'm going to draw in that bottom line there as our sort of base support. It's been, we can even extend that all the way back there, so you can see it's quite significant as a support level. It's been around as either a support or resistance level since around 2021, so that's relatively a long time. We see that we have sort of double bottomed off the base of this now, much like we did in the past, and this little resistance level that we had here seems to have broken as well. So that to us is a buy signal that we could potentially take the trade up to, let me draw another line in here for you. I think we could see maybe 180 as a potential target, alternatively even as high as, let's connect there, 189, sort of 190. So I think this is a relatively good entry point as well, even if you just trade it for the range, right? You've got sort of the big range sits around there. So, you know, this movement between 155 and 195, sorry, is quite a big range. So, okay, we're not exactly catching the very bottom. We're still getting it sort of below 165, below 170. I think we've got quite a bit of upside there, and we've got some potential targets as well. So, just as a, again, speculative type CFD trade that we're going to hold for maybe a month or two, I think it's a relatively good entry point for the speculative trader.
I mean, listen, SA Inc. is seen as quite cheap, and as we're heading to rate cuts probably in the second half of this year, SA Inc. is expected to lift with that risk-on rally. Should we expect the banks to also get a lift, considering how they also benefited from the high?
Yeah, so the rate cuts is not such good news for the banks. What it does do is it stimulates lending. But what it also does is it compresses margins a little bit on existing loans, right? Because essentially what happens is I pay you a fixed deposit rate. You deposit your cash with me. I give you a fixed rate for the next 5 years, but I charge you a variable rate when you loan money from me, and as prices go up, I make more and more and more, right? So that margin has been expanding this whole time. It's now beginning to compress once rates come down. But what happens is, because rates come down, it stimulates other people coming to market saying, well, I couldn't afford to buy a house before. Now the interest rates are lower.
So more volumes.
More volumes, So I think in general, and also the general benefit of the rest of the economy starts to move a little bit. The consumer's under a bit less pressure, more people are spending, you know, they're charging every time you swipe your card. So in general, all other types of revenue streams start to pick up for the bank as well. So a rising tide lifts all ships, right? I think that it's an attractive entry point into banks at this stage.
All right. Let's get to our educational segment as we wrap up the session. So position sizing.
So this is a tricky thing, and we were talking about it with our clients the other day. Position sizing can be done in a number of different ways depending on what works for you. I think what the most popular way of doing it is what's generally called the 2% rule, right? So when you buy a stock, you generally sort of have three numbers in mind: your entry price, your stop loss, and your target price, right? So what you try to work out is, if the share price moves from my entry price to my stop loss, I only want to lose 2% of my money in my account. What happens, however, is when you have really tight stop losses, let's say, for example, your entry point is 165 Rand and your stop loss is 160 Rand. If the share price moves 5 Rand to lose 2% of your money, so those position sizes can get relatively large in terms of nominal value or exposure, right? Another way of thinking about that is one that we prefer, is to rather look at how much % of our total cash are we allocating into any given idea. It's a lot less risky. Unfortunately, your returns, you know, you don't double your account every 10 days, but people who are doing that are either lying to you or gambling, just being really lucky, right? Yeah. So what we prefer to do is say, like, look, you know, let's say you've got 100,000 Rand, let's allocate maybe, you know, it's, to be quite frank, it's not the world's largest portfolio. So something like Absa, for example, if you wanted to take this, you might say, I would allocate 10% of that to this trade idea and buy 10,000 Rands worth of Absa shares rather than buying 150,000 Rands worth of Absa shares, because I'm going to lose 2,000 Rand if the share price moves only 5 Rand. So I think to err on the more cautious side by looking at it, you know, I have X amount of money in my portfolio. I want to be able to take 5 ideas at a time, or I want to be able to take 10 ideas at a time. How can I split my portfolio into chunks so that I don't overexpose myself? What happens a lot of the time with things like the 2% rule is that we tend to over leverage ourselves quite heavily. So if you've got 10 or 15 trades open, each with a 2% risk of your portfolio, you're not taking a huge amount of risk, right? Until the entire market falls, say, 5% in 2 days, and suddenly all 10 of your positions get knocked out for 2%, and you feel an enormous amount of pain, right? So it's better to keep in mind the total exposure that you're running. If I've got 100,000 Rand in my portfolio, I don't want to be sitting with more than 300,000 Rands worth of exposure sort of at any given point, right? Because it gets massively, massively risky if you do.
All right. Well, thank you so much for your time and for your insights and that technical analysis on those 3 stocks and our educational segment. That was founder of Herenya Capital, Petri Redelinghuys, with this week's Trade of the Week.